John, accountingplay.com, app trilogy, iOS, all that good stuff. Today we're talking about small business structure and tax. So as I always disclaim everything, this is of particular importance, the disclaimer that you really need to speak to a CPA, get educated, have an attorney and CPA meeting at the same time after you've educated yourself, maybe made some own type of decisions. Be smart about it because one size does not fit all. So I am a small business CPA guy. I love small business. So the needs of a small business with one person, two, or three are very distinctly different from a Fortune 500 C corporation, massive corporation. We have the entity structure decision, which we went over in prior lessons, LLC, C Corp, flow through versus double taxation. So I just want to talk about some practical things. When operating a small business, huge concern is going to be liability protection, and that's going to involve insurance and business structure. Now the practical thing is if this business doesn't have any value, you're just a consultant, you're just yourself, and you don't have any savings, what's the point of paying $1,000 a year of state compliance costs as well as compliance costs for an accountant? So that is the practical side that an attorney will not always want to talk about. You have liability protection. You have accounting. Accountants want to account. Attorneys want business structures. Accounting. Step one, separate bank account. Separate bank account. Keep it simple. You might be a junkie for credit card points and all that, but as simple as you can get, that being a debit card, it's going to make your life easy, or a lot easier. On all this stuff, you're going to want records. So save via PDF and some sort of secure file sharing in order of month. Have the records in the PDFs. When you buy stuff, believe it or not, the IRS likes receipts. Because if you have a purchase from a grocery store, what was it? Was it snacks for the office? Was it a seminar that you put on? Or was it some weird thing you bought for yourself? I don't know. So save those receipts and save them in excess. So I don't do accounting from receipts unless you were to have some situation where the purchase at the large store was part business and part otherwise, and I had to look into it. But for the most part, we're going to go off the bank records, and the receipts are just going to be kept in an envelope or a box as in a just-in case. So you just keep that stuff around. Not a big deal. And this also includes deposits. So things are getting better, but for example, one thing that I like to use is ATM. And yes, print images. So when I get something, I want to know who gave it to me and just have a nice record of it. A lot of people are going to run off and want to use QuickBooks or Xero or whatever software. But first year I was in business, I just used Excel, or that could be Pages, any other type of substitute. So on the onset, keeping it simple, having a good invoicing software is great because you're going to start getting nickel and dime, $10 every month maybe for accounting software. Having an accountant set that up for you is going to be very complicated. Using your advisors. For the accounting side, if you're going through QuickBooks or Xero or whatever, get in QuickBooks a pro advisor or equivalent, someone who's going to do setup for you. And I prefer an hourly teaching. That's what I do with my clients. Because this software is going to do a lot of automation, and when the accountant, either in the States or if it's an outsourced type of solution, you're going to just start categorizing anything from the office store as office expense, when it could be an asset, it could be something else. And so the range of bookkeepers that help you are going to be really, really broad. So be careful in this setup. I'd highly recommend getting a couple hours of tutorial and tutoring from a qualified bookkeeper CPA at premium rates. Now this is my preference. I would say premium education, so you can learn kind of how that works and it's set up properly. Once you understand it, and once it's set up with the premium people, if you do have a large invoicing function that you have to outsource, or a large payables function, invoicing meaning accounts receivable, bills that you're sending to clients, accounts payable meaning incoming bills. So if you have large volume, and once you have the good structure, at that point it is much easier and better if you need to outsource that kind of work. Let's go ahead and also discuss a major issue: employees versus independent contractor. Continuing on with our small business lesson, employee versus independent contractor. This is an issue that is highly litigious, meaning legal problems. Talk to a lawyer about this. As a CPA, I cannot make any distinction in this area, but the IRS does have its own opinions, and I just want to cover some of the basics and the basis of these different things. So we're talking a small business here. It could be a variety of different structures, but we'll just say it's a sole prop. Now, this sole proprietor could be doing a variety of different things. We'll call it pool cleaner. So this pool cleaner is having people help him, we'll assume, Mr. Pool Boy. So we have Mr. Pool Boy. Mr. Pool Boy. He's pretty much getting clients, sending out invoices, and hiring other people to help him. So these other people who help him, if he just starts giving them a check saying, hey, look, help me out, I give you $1,000 a month, he is going to have to decide, are these my employees or are these my independent contractors? Generally speaking, most people have been an employee at some point in their life. Employees get a wage and they get issued a tax document of a W-2. Contractors are supposed to be independent contractors, W-2. So these people get basically a payment. And this is reported via 1099 miscellaneous. Both can help out businesses in various capacities. So at Mr. Pool Boy, generally speaking, most businesses, if given the choice, would much rather have independent contractors because there's less compliance cost for Mr. Pool Boy. Because once you start getting into this W-2 employee, there are all these other separate requirements of tax withholding, also Social Security taxes, FICA, FUTA, all of that stuff, tax. In this case, the Social Security tax is split, pretty much 1/2 to the employee, 1/2 to the employer. This is Pool Boy. So, as a wage, he's having to compensate them. Depending on the state and other requirements, you might have health insurance to pay. You're going to have to issue W-2 compliance costs. You're going to also have probably some sort of employment insurance, disability insurance. So if this person gets laid off, they might have some rights to collect. Now, let's contrast this with the independent contractor. At the end of the year, you're sending them a 1099 miscellaneous form. So at start, they get this form called a W-9. Maybe they sign a contract. They get working. Now let's give some hypotheticals. How could Mr. Poolboy have an independent contractors do his work? So let's say there is another company in town that his brother-in-law owns, for example, or we'll say Mrs. Poolboy, actually. Oh, Mrs. Pool Lady. If Mr. Poolboy hired Mrs. Pool Lady on a per job basis and doesn't instruct the employee, doesn't do anything, it's possible that Mr. Poolboy hiring another business to help him out would be less of an employee but an independent contractor. So independent contractor is more of a per job basis, and they have supplies. Typically they have experience, right? And they decide the when, where, how this job is done. So they're truly independent, hands-off. Now, an employee, Mr. Poolboy is going to tell him, hey, this is how you do it, this is the supplies you use, this is the time frame, you're going to use the company truck, right? Everything seems like an employee. If they're truly independent, they probably have their own truck, they decide what kind of supplies they want, they have their own record keeping, their own business. Now, the distinction between these two is a slippery slope, and just because an independent contractor arrangement is signed does not mean that they're truly independent. And so independent contractors are going to have a lot more tax on them. And so these people can get angry, come back, come to the state or other authorities and say, hey, I was actually not an independent contractor. Definitely a slippery issue. Another, for a big corporation, janitorial services is something that they'll try and hire another company, or they'll have temp employees to hire another company so they get them off of their payroll and kind of push it off, and so they can hire and fire a little bit more easily. But again, if they're not really independent contractors, the authorities can say, all right, that was all BS, therefore you actually owe all this stuff and you are in big, big trouble. So we have Mr. Poolboy. Let's also give another example of not someone who's cleaning the pools, which is as obvious. Let's say we have web development. This is Mr. Poolboy online. So we have web development. So maybe we have an independent contractor and maybe you have an employee. So something like web development, if he finds some guy on the internet and says, okay, $5,000 for a website, that has more of an independent thing. The web developer says, okay, we're going to want to do this on Rails. He has his own computer, right? Experience, all this stuff. Mr. Web Dev LLC. Now, an employee might look like, hey, this is how someone could easily start to get in trouble. They find someone in the local paper, the local online listings, and they say, cool, $50 an hour. Come in to work. And then they also say, work under our senior developer and have morning meetings, right? There's no real distinction from what is more like an employee, just because they say, hey, this is $50 an hour on a contract basis. If they're telling them what to do, then it's definitely a big contrast versus, hey, here's a $5,000 project, we're hands off, you're truly independent. Employee, W-2, compliance, this is a 1099 miscellaneous that's issued. Also to note, once a business has employees, it also changes retirement plan eligibilities, and it just makes things more complicated. So what you see is a lot of sole proprietors who just operate by themselves and try and utilize independent contractors whenever possible so they can maintain the advantages of simplicity as well as maybe even some of those retirement account type of advantages I was talking about. In a nutshell, employee versus independent contractor. Always talk to your advisors. First, educate yourself, and then get advisors. I generally prefer an hourly basis versus a package of a reputable person because things are different and things are complicated. It's not a one-size-all-fit solution. And get your advisors working together. So the attorney should be tight with the CPA, and maybe there's some other advisors out there. Those might be your board, if you're a corp, or informal friends who are helping you. And then you might even have an investment person who also can work for an hourly thing. So things aren't sort of necessarily wrapped into commissions and as hidden fees. But just always watch out for those conflicts of interest. Please take all this as educational and as a thought process of my thinking working with a lot of different small business people. And I wish you lots of success in your entrepreneurship journey. AccountingPlay.com.